we're in a very shaky place for risk overall. I think that the time to be aggressive is when everybody's talking about a recession. I think that any buy below 25K on BTC, you're going to look like a genius in a year.
Yeah.
So it's just a matter of making sure that you have a good entry point.
Well, there you have it. Don't fight the flows.
You just don't fight the flow. Welcome back to another episode of 1000X. It has been a extremely eventful 2 weeks. Jonah and I are back in our homes, and we've been watching this unfold over the last 72 hours, and I'll say that it's going to be a very interesting period for the markets, crypto, risk, oil, just across the board. It's time to pay attention, in my opinion.
Agreed.
There's going to be a lot of opportunity out there over the coming weeks, but there's also going to be a lot of danger. And so, I think as the biggest, obviously the biggest news story of the week is this conflict that's come up in Israel. You see defense stocks up. Lockheed was up about 11% at the peak today. Palantir was up, and you're seeing oil go up as well, which I thought about for a bit, and I went back and forth as to whether oil would go up or not, just purely because the people fighting have nothing to do. I mean, there's no oil in Israel. There's no oil in Gaza. So, there was a little bit of should it go up? But Jonah, I'd be curious. I think you come from a world where geopolitics is extremely important. And so you probably got a good knack for understanding how these things might impact the markets. So I'm curious what your gut take is after digesting the news.
Yeah, sure. Let's start with oil. So oil is up because whenever there is conflict in the Middle East, it's a knee-jerk reaction for oil to rally. But if you delve a little deeper, the leadership of Hamas has openly thanked Iran for helping them plan this attack. The Wall Street Journal has reported something to that effect. I obviously have no idea what Iran's involvement in this particular conflict is, but the market perceives Iran to be sort of an involved participant. Now, Iran is a huge oil producer, and they are currently sanctioned by the United States, which makes it difficult for them to sell their oil on the open market. There have been years of attempts at diplomacy between the Biden administration, and even when Biden was VP during the Obama administration, to lift those sanctions and allow Iran to export freely again. And those talks have been progressing recently. So this conflict would be a setback to that diplomacy, which, obviously if Iran can export, that means lower oil prices. If they can't export, that means higher oil prices. So a setback to diplomacy, which would lead to higher Iranian exports, means higher prices. A bit tough to follow, but not that crazy. The sort of inside baseball here is that Iran is quietly exporting all of their oil anyway, or close to it. So even if the sanctions were to be lifted, it wouldn't actually result in much of a difference in global exports.
But it has to be at lower prices, much lower prices than what they would get otherwise.
Oh yeah, I mean,
right.
But what the price that you see on the screen is, that's just like sort of an amalgamation of all different oil prices in the world. I mean, like you're looking at Brent or TI, and those benchmarks factor in global supply and demand, right? You're not looking at the price of Iranian crude when you look at crude. So that's crude, right? That's why you got a knee-jerk rally. Even though the balance of supply and demand doesn't really change that much one way or another. It's just a setback. Another thing is wars consume a lot of petroleum, but Israel is a small country, and this war probably wouldn't consume that much petroleum. Meanwhile, if you had like China mobilizing against India, that would probably be a bigger deal. But that's not happening, we hope.
That's a good overview of the situation. And one thing that stands out to me is that despite crypto decorrelating from risk a ton over the last month, which is normally a bullish signal. So, I mean, if you look at it over the last 30 days, the S&P has traded down and Bitcoin's actually traded up over that time period. I think, unfortunately, a part of that is definitely sailor buying, and I think that what you're going to get if
How much did he
or
buy?
500 million was it? BTC sailor. Yeah, but it's one of those things that if you look at it just zoomed out, we're in a very shaky place for risk overall, because I think that flows still look bad. You have this conflict that's escalating, and higher oil is very bad for risk prices, especially right now
Because inflation.
because inflation, and rates are already booming. I mean, bond market is selling off massively over the last
So
month.
price of bonds down, yields up.
Yes,
Yeah.
price bonds down, yields up, and I think that has long lasting impacts that take a while to show up in the real economy. And so what you get is you have this perfect storm. And I think one other issue was that the market was pricing in a soft landing pretty aggressively, and we're slowly starting to go the other way. I think that the time to be aggressive is when everybody's talking about a recession, when everybody and their mother is looking around and they're going, yep, there's no way that we have a soft landing on the horizon. We're going into a recession. I think that's when it's going to be a good time to start scaling in. And so all of that being said, I don't think that Bitcoin has enough idiosyncratic juice to avoid a drawdown if the broader risk markets go down, which is why I'm positioned very cautiously right now. I think puts are a good idea. Both 2 week and 4 week puts. I think vol is pretty low. ETH obviously in more trouble than BTC, but also more shorted than BTC. So you have to weigh that a little bit. Just looking at open interest, there's a lot more shorts open on ETH than there
Yeah,
are on
ETH is
BTC.
just ETH is going south fast. I mean, you know, I'm sure you know more than I do at this point, Avi, but I just look at NFT floor prices, like CryptoPunks, you know, down 20% the floor in
Mm-hmm.
the last couple weeks. Gas prices on ETH, we're looking at 9 Gwei, you know, neutral for the flip between inflationary and deflationary. ETH is what, 15, 16 Gwei, and we're trading, you know, gas prices are well below that level. So there's just not a lot of activity
Yeah,
right now.
there's also the FTX guy that's just had 180,000 ETH. He's out as of current recording. He's out of about, let me see, half of it,
Well, there you have it.
and he's
Don't fight
got
the flows.
you just don't fight the flow. So I mean, if you're going to buy anything, you might as well just buy Bitcoin at this point. There's some alts that are doing well, like Link, like DYDX, but overall, I mean, this is a bad market to be long in. I'm waiting personally. I'm waiting for the flush. I think that any buy below 25K on BTC, you're going to look like a genius in a year. So it's just a matter of making sure that you have a good entry point. Because I mean, if you buy like right, if you're like buying 27.5 and you draw down 10%, then you start to feel a little bit skittish. Maybe you trade 24, and then you start to get real worried, and then psychologically you're hurt. I think that you basically just focus on getting good entries, so you're not psychologically tormented if we go down to 22.
Yeah.
And then just wait. I mean, realistically, like if you think about it long term, this is actually quite good for. I think conflict in the world, well, terrible is good for Bitcoin. It's very good in
Global
any.
disorder is good for Bitcoin because it is an impartial reserve asset that anyone can stash when the US starts going sanction crazy. And the other thing, you mentioned interest rates, Avi. Um, when we're sitting here in a year's time and interest rates are still explosive and mortgages are still expensive, at some point home prices are going to start to tank, and then the United States government in an election year is going to face a very difficult choice. It's like, the choice is, do we let American homeowners, do we let the middle class take the medicine that should have been taken in 2008 and again in 2020 and just tank the whole thing and cost ourselves the election? Or do we pump more stimulus in and print more money and bring yields down and do all of these things that governments do? Free beer for everybody. Do the things that governments do to get reelected, right? I have a
Mhm.
feeling it's going to be the latter. In fact, I'd put my money on it. And at that point, maybe you're looking at $100,000 BTC or higher, because that is what BTC is purpose built to hedge the investor against. That's the long term. The short term, it's like, who cares about Bitcoin when there's a geopolitical conflict? The only thing that's been holding stocks up is AI mania, Nvidia, whatever. Like, things could tank pretty hard in the short term. Tread carefully, tread lightly, and stay nimble. I agree with you, Avi.
You picked such an interesting time to get back into that game.
It's it's always an interesting time to get into oil or into crypto. There's always something going on. Like, let's say that you started in oil with a clean slate right now. It could
Mhm.
be like, well, you know, it's in a precarious position. It could go up a lot or down a lot. Like, if there's a recession, oil could tank 30%. If there's a massive geopolitical conflict in the Middle East, oil could rally 50%. Right. So you sort of have to tread lightly. Otherwise, you get steamrolled in your new role. Equally in crypto, um, we both think this thing is going to 10x over, on a 3 to 5 year timeline. Um, but
Mhm.
you might not be able to hang on to the mechanical bull, right? You might get thrown off. So I think all markets are in very sort of tenuous position. And that's because of the 10 years where they weren't in a tenuous position, which is like
Mhm.
2010 to 2020, when Janet Yellen kept her foot on the gas for like 5 years longer than she should have. Right. So there was a long period of time where markets were just super boring. And then that's set up for a time basically driven by interest rates and geopolitical conflict, where all markets, including crypto and crude oil and natural gas and equities and everything else, are going to be super volatile and treacherous, but also, really rewarding for people that play it right.
Yeah, that honestly, like that specific set of circumstances does make me think that the probability that we end up going sideways in Bitcoin or crypto for a substantial period of time is higher than people expect.
Hmm.
Like, I think one thing that people forget is there doesn't have to be a cycle. There doesn't have to be another bull run in 2024 or 2025 just because that's how it's worked in the past. I think in the back of everybody's mind that's almost taken for granted, but there were very specific circumstances that led to that may or may not happen again. I think, long term, my view of the world is obviously Bitcoin has a much greater place, but that could be in 2026 or 2027, which is why I'm spending a lot of time in on the other areas, right, of digital assets of crypto. It's like, okay, well, I actually had the benefit of playing around with Stars Arena, which was the platform that got hacked and kind of that was built on AVAX. And I tweeted about this, and I said, just to be clear, I said I would not put real money on this platform, but the reality is the product itself was pretty good. It's a competitor to FriendTech, and I used it, and it was, it had a feed, it had a better messaging system. Like, the product was more fun to use than FriendTech. And so we actually are seeing iterations now that are making consumer products for crypto better. And we are seeing usage. And if it hadn't gotten hacked, I think that it would uh, it would be doing quite well today, just by virtue of it being a good product. Not advocating anybody put money on it. Obviously, it's been hacked twice, but it's one of those things that makes you realize, hey, okay, maybe there are actually some good applications slowly coming out. And so investing in the tech, investing in the infra, it's like, okay, this stuff can actually decorrelate over a long enough time period. You might find that Bitcoin could be down 15-20% over the course of a year, and there are going to be things that are up 100%.
Yeah, you just have to be one of the few people left paying attention. I mean, it if it didn't get hacked, that's a big if, right? Like, if it had a good user experience, if it didn't get hacked, if there was no fraudulent SBF type character
Mhm.
roles involved in all of these ifs, you kind of, crypto just, it's a little bit too plagued with problems at the moment, and I feel like to have its next big summer, you need to have like 5 to 10 amazing new products and use cases come out that are secure, user friendly, and run by competent operators. And I feel like we're due for that. I'm
Yeah,
just
the
waiting
competent
for
operator is being key.
it. Yeah, exactly. Because I mean, anybody can spin up a project at the valuation space of 2021 and run it into the ground. I feel like you need lower prices to foster, good stewardship of a project.
It
Um,
does. It does make me sad, just because it was a pretty solid, like it was a pretty solid product that got
yeah.
hacked. I was like, okay, this thing's good.
So FTX got hacked as well. What happened there? Some guy stole how many ETH? And then, do you mind talking about? I wanted to ask you as well, Avi. So there's the FTX hacker, and then there's the FTX administrator, custodian, whatever you call it, Galaxy. So what are
Mhm.
these two entities doing, and how much are they selling each week?
It's a really good question, and the answer is uh, it's going to take a very long time to actually come up with the plan. So they're in the process right now of actually figuring out what assets to sell, how to sell them, over what time period to sell them, and this plan has to be approved. And so this selling is going to take a while to actually occur. It's obviously going to be an overhang on the market, but it's really mostly going to be an overhang for Solana, as relative to everything else, because the actual supply that they have of BTC and Ether are much lower in terms of circulating cap than
Yeah,
Solana is.
Solana looks rich at
So
$22. I agree with you.
it does. It's one of those things I really like over a. Oh wow! Look, we're getting a nice little sell off here on BTC. I think ETH puts are a great idea. I think they just make sense right now.
I would
I also
finance
think
them by
that
selling calls. I would just buy bear risk reversals, buy put, sell call. I don't see ETH exploding higher in the next couple of weeks. There's too much selling to
no, there's too
finance your
much.
puts.
There's the issue right now with the market is that there's no real reason for people to step in and buy. And what I mean by that is you had the Grayscale lawsuit resolve itself, and so the only positive catalyst to the upside is the ETF at this point. And so the way that I always think about these types of things are you have your momentum buyers who are currently momentum sellers, and then you have your value buyers. And when I look at Bitcoin, I don't see value until 25K or lower. And so there's really nobody that's going to, in my opinion, there's nobody that's going to step in aggressively until those levels. And on ETH, it's much lower. I think one of the issues with ETH has actually been, you know, conversely the prevalence of L2s and the amount of activity that L2s have relative to the base layer. Because the argument was always, well, if you increase throughput by 100x, which has happened, then you should increase transactions by 100x. But that hasn't happened. It's not even close to happen. What you've just done is you've just moved all the transactions from ETH to Arbitrum, and you've barely increased the overall amount of transactions that are occurring. And so, from my perspective, what you get is there's going to be a big lag period over the next year where ETH just looks like shit on a fee basis, and everyone was kind of expecting it to look good on a deflationary basis. But that's just not going to be the case as long as activity is mostly on base or mostly on Arbitrum or mostly on optimism. So I'm quite negative on ETH for the time being. It'll have its time again, but I think for right now, I'm quite bearish on the ETH BTC
See,
ratio.
I used to be bullish on ETH because all these scaling solutions were being built. Like just being a California guy growing up in the state of California, they're always adding lanes to the freeways, and it never seems to ease the traffic, right? Like every time they add a new lane, it just brings more cars onto the freeway. So basically, after a while, you start to wonder, like, what's the point of doing this? You don't
Mm-hmm.
ease the bottleneck. And I thought the same thing would happen to ETH. I thought it would be like, okay, you have this blockchain whose block space is constantly in like there's an excess of demand relative to supply. Gas prices are insane. You have to spend $200 to buy an NFT that's worth $20. Like, how the fuck, So I just assumed that scaling
Mm-hmm.
solutions would would ultimately bring more flow to ETH and make the product more scalable and make it this global world computer faster. And it would be like the California freeway. Instead, it's actually looking more like the way that pipelines work in the Permian Basin in Texas, where sometimes there's just too much oil, not enough pipelines, everything's bottlenecked. So then there's this frenzy of pipeline building, which is effectively a scaling solution for an oil field. And then suddenly there's just way too much pipeline capacity and not enough oil, and then it goes back and forth. So I think ETH, yet another analogy between ETH and oil. I think it looks more like scaling solutions were overbuilt during a particular time in ETH's history when there was a lot of demand for it. And now there's not a lot of demand for ETH because no one cares right now, and way too much capacity. And so gas prices are just forced into the toilet. And I agree with you. I think the pendulum will swing back the other way hard one day when it's like, holy shit, we have this thing that's cheaper and better than AWS for our use case and probably more permanent. But like, that might be a year off, or 6 months off, or 2 years off. Who knows?
There's no OPEC for ETH. It's an issue.
So there's a foundation, and they're selling, right?
And they're selling right now. They're increasing supply at the worst possible time. Even though they sell very small size, they've been remarkably consistent at selling tops, local tops. And I think it's very funny because I think I think they sold 2.5 million this time, which is, dude, that's nothing. But everybody's talking about it, and everybody's like, oh my God, what do they know this time? It's self-reinforcing is the thing, right? So they do it right once. And then people are like, oh my God, they must know something. And then they do, and then people start to panic.
Yeah. Look, if your entire net worth is in ETH right now, you should be panicking. But if ETH is part of a diversified portfolio, as we've recommended, maybe you shouldn't be panicking. Maybe it's more like, oh, cool.
No.
This thing.
I would definitely reduce ETH exposure. I think the right level for ETH BTC to become a gigabull is 0.5.
Well, if you're like me and you own NFTs, your ETH exposure reduces naturally for you on sell-offs. It's like a gamma position, right? During these periods of time where ETH goes down, the value of your NFTs denominated in ETH also goes down. So I have less ETH than I did when ETH was high.
It's amazing how it self-corrects like that, Jonah.
Yeah.
That's good.
At this point, I think you're right. I think so. Also, there was that futures ETF that launched for ETH, and while in and of itself, I don't think it's that relevant because no one cares about a futures ETF anymore. People just want spot.
It's just such a bad product.
Like the product itself is like, you could only imagine a world of people buying tons of it at a Pico top where it's just like, oh my God, get me ETH exposure somehow, anyhow. I don't even want to read the prospectus. Like, obviously in a bear market, something with contango roll yield isn't gonna attract anybody. So I'm not like reading into the poor ETF launch as like, oh wow, look at how doomed crypto is. I'm more looking at it as like, you launch a crappy product in a down market and no one cares.
Yeah. I think one issue is that Beto was live, so everybody could see just how shitty how terrible that product is.
Yeah,
and the fact that, although one thing that's funny is you tend to people actually overestimate how bad it is, because if you look at the returns, it's underperforming Bitcoin by something like 30% just from a pure like price basis, but they have dividends and cash distributions, and that actually compensates for a lot of it. So I think it's actually only underperforming by 10%, but that's still bad. That's still very bad.
Only underperforming by 10%. So you know what doesn't underperform by 10% is stablecoins. Avi, what do you think about the world of stables right now, and specifically the leakage in USDC?
There's a concept that good money drives out, or bad money drives out good money. And I think that's what's happening right now. Is you have a lot of people in China, people in Russia that want dollars, and they want to have real dollars. Maybe they want to buy real estate in the US, or they want to go buy other goods in the US because they want to protect their portfolio. They don't want too much exposure to the ruble or to the yuan. And a lot of people are using Tether to get out of this, in my opinion, and based on the flows that we're seeing and the people that we're talking to, this actually seems like a very common occurrence. People are just buying Tether to get out of get out of their base currency. And so if you actually look, a lot of Tether growth has almost 1-to-1 coincided with USDC decline. And I think what's happening is that people are, because you can source Tether, if in China and Hong Kong and in these places, you buy the Tether, you create the Tether, then you take the Tether, you go to Binance, or you go to OKX, or you go to Huobi, you go sell it into USDC. Then you send the USDC to somebody else who has an account with Coinbase. They redeem it, and then you buy something in the US, whether it's real estate or something else, and then you transfer over the deed. Right. And so that dynamic, I think, is actually occurring not infrequently right now.
So just for the listeners,
and that's leading to the contraction of the USDC supply. Because if you think about it, USDC is a better product. It's just that the irony of the situation is it's dying because it's such a good product.
I don't know if I have the same opinion. I mean, I think that USDC is a better product from a mint redeem perspective. It's like technically a better product, but its target demographic is the developed world, where crypto is not a solution. Like crypto is a solution right now for emerging markets, for underbanked markets, for people without access to stable currencies or JP Morgan checking accounts, right? That's where Bitcoin and stablecoins are really useful. So ultimately, if USDC serves provides a much more optimal technical solution, but serves the developed markets where that solution is not needed, it's going to lose market share to, the technically inferior asset that serves the market that actually demands it. So since the beginning of the year, since Jan 23, the market cap of Tether has exploded from $65 billion to $85 billion and has been very stable at $85 billion since the summer. Meanwhile, USDC Circle has collapsed from 40 billion to 25 billion. So a $15 billion decline. And ultimately, I think that what this is telling you is that there is a use case for crypto right now, a very important one, and it's preserving dollarized value in the form of Tether, and whatever sort of developed market. So I think it's emerging markets that are still using crypto for their sort of purpose-built use case, and maybe developed markets are giving up on crypto a little bit. And then there's probably some cycling, a lot of cycling in sort of what you just described, Avi. Probably a lot of that is going on as well.
I think so. I mean, I think that it's at the end of the day, it's demand for dollars, and USDC is the best form of dollar right now. I also think, by the way, that's why you're seeing a bunch of...
USDT is the best form of dollar?
USDC,
but the market cap of USDC's collapsed.
Because people know that it's backed by dollars.
Oh, right. I see. So redeeming it into... Yeah, okay.
Right. So it's if you want dollars, your best bet is to buy USDC and redeem it for dollars. So from that perspective, it's a best product. It's a best way to access USD.
But why not Tether? Like why can't you just redeem Tether and get your dollars back? I guess it's because the mint redeem mechanism for Tether is a little bit more complicated.
It's much harder.
Yeah.
You have to work with specified counterparties. Yeah. I also think that there's potentially somewhere it's like, okay, well, do I want to go through the process of redeeming with USDT, and then have wires to the US from USDT bank accounts? We probably don't want that, actually.
Probably not. Easier to just use the Coinbase USDC channel.
Exactly. It's much, much easier to use a Coinbase USDC channel. There's a drain in fiat in the general ecosystem right now. And that's actually one thing that, by the way, I think is pretty useful for figuring out what your risk tolerance should be in the markets. Like one anecdote is that we use the stablecoins deployed in the market. So for example, just like take all the I take the top wallets that are active traders, and just calculate what their average stablecoin balance is over the last year, and then when it goes up really high, that's actually a good buy signal. When it goes down pretty low, it's a good sell signal, because there's just not that much fiat left in the system to either buy or sell. But in aggregate, there's just been there's been a drain. That's not good. Which is why, again, I'm advocating for I'm advocating for patience. I'm advocating the bear view.
I don't expect ETH to test the FTX lows. Like, I don't think it's going to get that bad on apathy. I think that's a forced selling flush liquidation type price set. So I don't know. I don't know how many of you listeners out there have researched the Kelly criterion, but it's worth pulling up on Wikipedia and maybe doing a little spreadsheet and just typing in your own probabilities of where you think different price points and the probability of ETH reaching them. It's amazing how, let's say that your band for ETH is sort of like let's call it 2 standard deviations within the next year, is sort of like $1,000 ETH to $2,000 ETH. It's amazing how quickly the risk reward of being short gets, like, it goes from amazing to terrible as ETH goes from like 1,600 to 1,400. How quickly your risk reward shifts, and how scared you should be being short at 1,400 becomes as you approach sort of the bottom of your distribution. And personally, I don't think ETH is going to go much below 1,200. I think that would be like an absolutely dire liquidation flush, like everyone just gives up on it type level. It would be lower, but I think already half the space threw in the towel during FTX. So I think the level is higher now. Ultimately, like Avi said, tread lightly here, and I think it's more of a thing for investors to add on dips rather than traders trying to dance between the raindrops and capture $100 a token, selling now and buying later.
You framed it well. At 1,400, I think you basically have a floor at 1,100, and so the risk reward there just becomes very, very skewed, which is why I think that you're probably going to get a lot of chop between this 1,650 area and this 1,500 area, just because that is the area where risk reward is the most balanced. If you're looking for a move to 2K, or you're looking for a move to 1,100, that's just the most balanced area for you. And so I think that's where the real battle is going to take place. And if we break down into the lower portion of that, that's a buying opportunity, which is just kind of what I've been saying, right? You're just looking for good areas to add length so that you look like a genius in a year.
This is, you're absolutely right, and you have to have that year time frame. Also, if you read crypto Twitter frequently enough, as probably most of the people who listen to this podcast do, you see people just like throwing in the towel, like giving up on ETH. Like, this is it. I've been long ETH since $100, and it's over now. Like, this is a useless piece of shit asset. Like, you read tweets where people who have been ETH
Bullish
for 5 years are just like, it's over. Never buying this crap again. Like, I'm selling all my ETH. And so if you're just if investing or trading isn't your profession, but you hold some ETH in your personal account and you care about your net worth, like you look at your ETH and you look at these tweets and you're probably saying to yourself, like, crap, I'm going to get out. Remind yourself, if that's what you're thinking, that in 12 or 18 or 24 months, when this thing is gassing higher and it's trading $5,000 a token, those very same people will be talking about how ETH is the future, how it's going to $50,000 a token, how they've been long all the way up, right? So you kind of have to filter out the noise and remember that.
Dude, I love it. I love it when you go gigabull.
It's like
this.
It's a probability distribution. It's a gradient of outcomes. It's not black and white. ETH is not over. ETH is not the future. It's like this constantly evolving shade of gray.
Although I will say just one thing is that I am worried about L1s in general and what happens when block space becomes very cheap. I guess it remains to be seen, but we're really going to need to increase the amount of transactions that go through these networks. And so what you might find is we might just be going through a dead period for L1s, which is why I'm so focused on applications right now. Because in order for L1s to do well over the next couple of years, you really need applications to do very well over the next couple of years, because L1s have become so much more efficient over the last 18 months, right? With all the launches of the L2s, and you've got ZK coming out soon. So I think that it's just going to be all about the apps. And I think we've sort of beaten that horse. I don't want to get too deep into it.
One game could bowl over, like it could only take one application to generate more transaction volume than the network has ever seen in its entire history, right?
Mm-hmm.
I don't know, maybe a game or a back office payments application, Visa. I don't know. What do you think? What type of application would you want? Are you looking for?
I think gaming is the most likely. Then you have the social finance as well. But realistically, I think that one thing that could really take off is if you got tokenized stock trading, bond trading on chain. I mean, I know Goldman's trying to come out with their money market fund in Q1 of next year, and that's going to be big. And we'll see if it's composable with the rest of. I doubt it, but we'll see if it's composable with the rest of the world. But the more products that launch like that, I think the better off, the better off we get in crypto, and that's something that I could really see taken off massively. Look at Canto. So they're doing a lot in the RWA space right now, and if they one of the things that they're teasing a launch of a treasury product. And for example, what if they allow you to lever up treasuries? That would be that would be a good use case for crypto.
Yeah.
So we'll see.
If you're in crypto, it should be for the big wins. It's not to dance between the raindrops and chip around. I mean, honestly, I know there are a lot of market neutral funds out there, and I'm sure some of them are really successful and run by brilliant people with great investors and everything. But I think that whole sector has been torched over the course of the last year and a half because they've taken so much risk. A lot of them lost assets on FTX, which was ironically the best place to get short crypto. So there was probably a lot of people using FTX perps to sell this or that altcoin, and people probably lost a lot of money on that. And then now we're still in a bear market. Let's say that you want to be short. My favorite dead horse to beat, short Polkadot versus long ETH. Where are you going to get short Polkadot? Binance?
Mm-hmm.
Is there any efficient way to do that? So the market neutral strategies involve a leg where you get short something that there's no efficient way to get short. So it doesn't work, right? You have to be in this for the asymmetric upside, and you have to find ways to survive during times like these. So you need investors that are in it for the long haul. You need investors who want exposure to crypto. You can't just sell a market neutral strategy to an investor base that's uninterested in crypto. You have to.
I agree with that. I agree with that. This has been a good conversation, Jonah.
Always is, Avi. Thank you for taking
always fun. No, this is dope. We'll do it again. We'll do it again in 2 weeks.
Stay safe out there, everybody. This world is looking complicated and tricky again.
Hopefully, when we talk next time, we will be out of this situation. But if not, I'll see you in World War III.
Till then, Avi. Good talking.
It's good stuff, Jonah.